In this video, guys, we're going to look at a hypothesis versus a conclusion. Stay tuned. Hey traders and investors, a warm welcome to you. Alright, so I think this is quite an interesting topic, right? How we speak to ourselves. I get more and more into this as I progress in my trading career and progress in life in general. How we speak to ourselves and how we kind of frame different things, whether that's internally or externally, always really gives us a different approach and a different reaction to it. You know, if we're framing a market condition as good or powerful, then we're going to feel more, inclined to move towards it. If we feel it as it's bad and it's negative, we're going to be more inclined to move away from it. So there's so many things like that, so many examples of that in life. So I started thinking about, okay, when we come up with a trade idea, how do we frame it in our minds? Now, to me, there's two ways of framing a trade idea. One is you use a hypothesis and the other is a conclusion. So let's look at an example. So you're sitting there, you're looking at your screens and you see something, whatever it comes out, and you think, you know what, I think Tesla's a long Tesla. So you can now frame this in two ways. One is a hypothesis where you're basically saying, I have limited evidence, limited information, but this is my belief and this is my hypothesis. This is what I expect to happen. I need to prove it. Now, there's probably a full scientific definition there because it comes from like experimentation. The hypothesis is X, disprove a hypothesis, disprove it, etc. Going back to kind of school days here, but I'm sure some chemists and biologists and people who have done it at a far more high level than me can kind of give me the proper definition of a hypothesis. But it's really saying, okay, prove to me that I'm right or prove to me that I'm wrong. And that's in a nutshell what we're saying. Versus a conclusion, which is this is fact. Tesla is going up. So Tesla is going up. I think Tesla is going up. I'm hypothesizing that Tesla's along. I think Tesla's going up. It's definitely going up. Both are expressed in the same way, long Tesla, but both are framed in a different manner. One is a conclusion where you are so focused on it is going up. And the other is, okay, I need to have evidence, got limited evidence, and I need to have evidence that disproves it or proves it as we go on. Now you can see how these are two polar apart views with exactly the same outcome in the market, exactly the same order ticket, exactly the same exposure, but two different mindsets. So this might come to explain why some people trade strategies differently. And as you know, guys, if you follow the videos, I'm kind of really interested in that kind of stuff of thinking about how you think about strategies, how you think about discipline, trading, etc. And so this is really where this has come from is, okay, if you're hypothesizing, you're open-minded to both sides. You're like, okay, I've got limited evidence, but I still think it's a long. Market goes up, okay, I'm being proved correct now, hold the position. Okay, some bearish news has come out, but the market's held firm. Well, that further proves that I'm correct. And you're basically adding and just constantly checking whether you're right or wrong. Now, that doesn't necessarily mean just because the price goes down you're wrong, but your hypothesis is now looking not so good because the price is going down. And at some point you have to pull the plug. Now notice, realize it's not a binary thing. It's not like we're testing something and saying, is it going to react with this element or not? Yes, it does. No, it doesn't. I know it's not binary. I understand that with the markets and it's something that we can't really do much about. But with hypothesizing, we're constantly generating new evidence, gathering new evidence to support our hypothesis. Whereas a conclusion is Tesla's going up. And when it goes up, we're like, yeah, we're right. I told you. When it goes down, like, no, it's going up. And you can see the difference in mindset and then potentially, when we go one more level, how you react to that. So when it goes down, do you react to the in case of, well, no, it's definitely going up. I conclude it's going up. You might even double up. You might add more to the position. You might stubbornly hold on to something that's going down because you're concluded it's going up. You don't believe you're wrong. Whereas if you've got a hypothesis mindset, you're saying, listen, the evidence is now disproving my hypothesis. I need to close the position and come up with a fresh idea, maybe in a fresh market. So that approach is kind of helps you adapt, helps you take in more of the information and helps you become more of a trader that expects not to know what's going on, but just has an idea. This is why we come out with trade ideas. Hedge fund managers, trade ideas. It's an idea. Then you put the idea on, and then you constantly assess the idea. A conclusion is dangerous, guys. If you conclude that this is going up or this is going down and you've got a position on it, it's super, super dangerous, because it's very difficult to come back from a conclusion, which is a foregone, I would say the foregone conclusion. It's, you know, a cemented thing in the ground, as opposed to a hypothesis, which is moving around constantly. So something to be mindful of, just be careful of that. And there's loads of different things when you think about the way you think about trading. Think about in a flexible terms, hypothesis rather than conclusion and firm. Now, I recognize we have to have conviction in our trade, but that doesn't necessarily mean we have to be stubborn and we have to think that's definitely where it's going to go. And even if you've got a price target, I conclude that Tesla is going to go to $1,000. You know, that's my conclusion. So you may go up, it may be right, but then it may start backing off and something might start happening, and you're so firmly think it's going to be 1,000 that you don't take in all the information, you don't react to a setup that's actually quite bearish and would be good to close a position because you're so stubborn. So you've got to have a little bit of conviction in the trade to place a hypothesis, to have the risk, but you've still got to be open-minded and flexible. And the key here, guys, is literally taking in all the evidence, adjusting, adapting and tweaking at various set intervals. Doesn't mean you're doing it all the time, because that just makes you go crazy and you're constantly managing the position. But at certain points, you're testing the hypothesis. Okay, Tesla's bullish. Is it Tesla bullish? Yes, it's gone up and it's done this, it's that, rather than the conclusion mindset. So I would think about that. That might help you if you are really stubborn with the market, if you're really kind of overdoing the belief, because that you need some of it, but too much, like I say, gets you in trouble. All right, guys, that's kind of a hypothesis versus conclusion. Think of it in terms of a hypothesis. Think of it in terms of an idea. Reassess it. That will stand you in much better stead than a conclusion, which really puts you in blinkers on and leaves you no room to adapt to the market conditions. All right, guys, take care. Whatever you're doing, keep your risk managed. Goodbye.